Hello, good afternoon and welcome to your stocks on CNBC-TV18, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And markets as of now, off the day's highest point, we're seeing around a level coming in for the Nifty is 24,950 approximately. So 70 points off the day's highest point is what we're seeing for the Nifty 50. But still holding on to gains today, 3/10 to 4/10% of gain is what the Nifty is managing to hold on to. Let's also look at the Nifty Bank. That's supporting a bit of up move today coming in for the Nifty as well. So Nifty Bank, that's up 0.6% as well. That's doing well. Apart from that, Nifty IT, second consecutive day of gains coming in for Nifty IT and 2.5% gain. Obviously, the top sectoral gainer, that is Nifty IT. Other than that, let's pull up the advance decline ratio today. That's clearly in the favor of advances versus declines that we were seeing. So advances are at around 1,700 odd stocks are advancing, while declines coming in is at 1,056 stocks, which are on the decline side. So clearly, outperformance that we're seeing today is going to be from the broader end of the market, right? So Nifty mid cap and small cap, that's where the outperformance is coming in. But this is a show where we solve all your stock related queries, and to do just that, we have Asta Jain, research analyst at Hem Securities, as well as Somil Mehta, head of alternate research capital market strategy at Mirae Asset Sharekhan. Somil as well as Asta, good afternoon and thank you so much. Okay, it's not Asta Jain, I beg your pardon. We have Shahina who is joining in with us today. So Shahina, Shahina, good afternoon and thank you so much for joining in with us as well. But Shahina, let's start with the first query for today. We have this coming in from Raman Kumar, who's writing to us from Pune. He's holding 50 shares of Dalmia Bharat and this is at a price of rupees 1,740 rupees per share. He's making a profit on this one. Now, he wants to know the long-term story for this. Should he hold or should he just add more shares? Is that a possibility right now?
Hi, good afternoon, Vinny. And yeah, see, actually, I don't blame you for mistaking. This was a last minute step in, so I replay.
I'm used to seeing you on Fridays and having you party with me on Fridays, right? We talk about Fridays, so I'm used to seeing Shahina on Fridays for me.
Absolutely. So it's okay. As far as Dalmia Bharat goes, I would believe that, the investor should continue to hold because the valuation is at about $101, per ton. EV by ton is not expensive. EV by EBITDA is not expensive at 12 times also. And, they have their plants in East and, they have got their raw material, which is actually giving them the benefit for lower raw material costs, so better returns on their capital invested. So I would say continue to hold.
Continue to hold, not add, right? They want to add some more, but does it make sense adding right now or just hold?
I would say you can add also.
You can add also. Somil, what's your view coming in for Dalmia Bharat on the technical front as well? Last 6 months is already up 44-45%, right? So should they maybe, continue to hold, or even right now this is a good level to add some more to that portfolio?
I think Dalmia Bharat definitely great run up in the last a few months and trading about all the averages. There was a small consolidation 6 months back, and that consolidation has broken on the upside, which is great. In the medium term outlook, definitely positive. In the very short term, we may see a small correction till 2,300, 2,250 levels. So that's the level to watch out for. That's a take on Dalmia Bharat, and I'm positive on this. I think it would go above 2,700, 2,800. But if I have to add more in the cement pack, I would add more in Ultratech cement. That looks great to me in the medium term outlook and even in the long term outlook.
Okay, thanks so much for that view coming in there. Add more. There are a couple of names that Somil has given over there. Let's move on to the next query for today. We have Archana Kapoor, who's writing to us from Bangalore. And this one is on Coforge. She's holding 150 shares of Coforge. And this is at her price of 1,000 rupees per share. She's making a profit on this one and wants to know the future prospects of her investments. Shahina, IT, last couple of days, you've seen that bit of an up move coming in. Yesterday was that Infosys buyback announcement, which led to that up move. Today we have, the US company Oracle, which came out with some positive commentary, which is leading and helping that continue in terms of the up move for the IT pack. Now, for Coforge, what is the story that we are watching out for?
Yeah, absolutely. And the sentiment for IT has improved overall. In terms of Coforge, I would say it's a good buy, but I would prefer if you want to, I hold it and add at lower levels because valuations are a bit expensive compared to even the large cap IT companies. So if you look at, on a EV by EBITDA basis, it's about 28 times. 1 year forward P is also about 35 times. So it is not cheap versus the large IT. But at the same time, numbers are quite healthy. We saw good growth in the first quarter and likely to continue on into the rest of the year. Also, management is very confident of getting a good new deal. The deal wins were pretty strong in the first quarter, likely to continue for the rest of the year. So I would say hold, add at dips.
Okay, hold and add at dips. That's the word coming in from Shahina on the fundamentals. On the technicals, what's the word for Coforge?
Absolutely positive. Coforge, LTIM, and TCS. These are my picks on IT sector. Coforge, the levels would be around 1640 would be very crucial to watch out for as a support, and my targets would be around 1950 for Coforge in the short to medium term outlook. It has just broken out of a small inverted head and shoulder pattern, and I'm extremely positive on Coforge.
Okay, extremely positive on Coforge. It's a positive view on the technical and fundamental front. Let's move on to the next query where Rahul Mishra, who's writing to us from Assam, he's holding 100 shares of PNB Bank at a price of 70 rupees per share, is asking whether to continue to hold or sell at current levels. Shahina, for PNB Bank, what should they do?
I would say continue to hold. Valuations are quite attractive. Price to book is just about 0.9 times. Also, if you look at their net NPAs, they've come down substantially. It's just now 0.4%. And balance sheet quality has improved considerably if you see it compared to the last couple of years. Their PCV provision coverage ratio is almost 90%. Having said that, the Q1 numbers were impacted to some extent because of the tax, but I believe overall, it looks like a good bank to hold for the medium to longer term. So continue to hold.
Continue to hold. That's the word on the fundamentals. On the technicals, Somil, last 6 months, 20% return. Last 1 year, not done anything in terms of a move. But last 6 months is where we've seen that bit of an up move. What should one do with PNB Bank now?
PNB Bank, I'm positive. Definitely Bank of India, PNB, Canara Bank, all of these are looking good, and they've just broken out of 200 daily moving average and a small triangle pattern specifically to PNB. The correction which we have seen in the last couple of weeks, I think that is over, and we have again resumed the uptrend. So my targets on the upside would be 120, 125 for PNB.
Okay, keep an eye on those levels over there for PNB. The next query for today is an investment query coming from Sharat Saxena, who's writing to us and he's saying that he wants to invest in the pharma space for the long term. Is asking which company can he look to invest in? Shahina.
The Pharma is always better to have a portfolio of a couple of stocks, because US FDA, they keep, doing the inspections and you have observations and then you see the corrections. Having said that, if I was to add a portfolio, I would say add stocks like Arbindo Pharma, where I'm buying it as a value pick. They are expanding in the US through acquisitions, which are there on the cards in the medium term, and their balance sheet is strong. Valuations, as I mentioned, on a PE basis, very attractive. Also on a turnover to their EV to turnover also is pretty attractive, just 2 times. You have Biocon, which I believe has a very strong product portfolio in the peptides, in some of their new launches in insulin that they are planned in the US and other markets also. So Biocon, while slightly more expensive than Arbindo, also Biocon in this year, first quarter numbers were also very disappointing, likely to continue on for the rest of the year because they have number of issues in terms of the write-offs for Veritas, which they're taking. Also, you have certain costs that they are incurring for setting up their new capacities. So to that extent, don't expect too much in this year, but repayment of debt, clean up of balance sheet, everything should happen. And the FY27 should be a good year for both these stocks. You can also add some of the hospital stocks like you have Apollo Hospitals, Fortis. So make a portfolio.
make a portfolio for the pharma pack, combine pharma and healthcare, and China has given some of the names over there. Somil, your suggestions, anything for the pharma sector?
Biocon and Apollo Hospital definitely there in my list too. So I agree on that. The two other stocks which I wanted to mention is Zydus Life and Dr. Reddy. I'm positive on these stocks. Zydus Life has just broken out of a huge head and shoulder pattern, so it's just resumed a medium-term outlook trend. My targets on Zydus Life would be above 1150 and 1200. For Dr. Reddy, my targets would be probably new high, but at this point of time, 1350, 1375.
Okay, keeping an eye out on those names over there. Biocon is making the list for both of them as well as Apollo Hospital. So keep an eye out on that. You can look to invest there as well as the other names that our experts have mentioned. But on that note, we're going to slip into a very short break. Don't go anywhere because after the break, we'll still be answering all your stock-related queries. Welcome back to your stocks on CNBC TV18. As of now, the Nifty is managing to hold at 24,950. Above that mark is what the Nifty is trading at. But let's keep it going with all your stock-related queries. And the next query for today is coming in from Sujit Benhur, who's writing to us from Bangalore. He's holding 100 shares of J&K Bank. This is at a price of 15 rupees per share. Okay, so they're making good amount of profit on this one. Wants to know if he can buy more of this, or should they look to book some profits? I'm just asking this on my own because they're making a good amount of profit. Shahina, your view, J&K Bank.
Yeah, he's made very good amount of money. And while it doesn't look very bad even at current levels, because numbers have valuation is actually quite good, 0.8 times, and numbers have actually improved. Balance sheet has improved if you see in the last couple of years, 2 odd years. But it is not something I would take part, as you mentioned, take some profit off the table, and you could look at some of the other banks. Even the PSU also, as we discussed, you have opportunities: PNB, BOB, SBI, private sector, ICICI Bank, HDFC. So you've got a variety of banks where you can invest in. So diversify.
Okay. Can book part profit and diversify and look at some other names of the banks as well. Somil, your view on the technicals, what should they do for J&K Bank now?
A bank in the very short term has been trending down. It's been making low top, low bottom, below 200 daily moving average. I'm not very positive on this stock in the short term. In the medium term outlook, it has made a very, very crucial support around 88 levels. So I will not expect this stock to go below that, but not very positive on the stock. You can see something like Bank of India, Bank of Baroda, PNB, Canara Bank. All of these stocks are looking great. Bank of India would be my preferred pick.
Okay, Bank of India would be your preferred pick versus a J&K Bank. That's the word on the technicals. Let's move on to the next query. We have Venugopal Raman, who's writing to us from Chennai. He's holding 111 shares of Finolex Cables. Cost price is 904 rupees. They're making a loss on this one. The stock is currently at 943. Now, he's a long-term investor and wants to know what is the outlook in terms of the stock moving higher from here on, and how long should he continue to hold the stock? Shahina.
I am not too positive on the stock for the medium to longer term. There are certain positives. One is that the balance sheet is strong. It's a small cap, but the negatives I think far outweigh. Like for example, if you see the quarter growth was about 13% in overall revenue, which is lower than the other larger companies in cables, and competition is increasing even more with more companies coming into the sector. Also, in terms of their raw material costs, they were impacted a big way, which affected their profits. So I think overall, it is better to switch from Finolex Cables to some other sector.
Okay, so move out of the cables and wire side, and you would prefer looking at some other sectors, and instead of Finolex Cable, look at some of the other stocks. Somil, your view for Finolex Cables, is it a different story that we could watch out for on the technical front? And could the viewer at least manage to come up to their cost price of 904 rupees?
I think in the short term, yes, I can see there could be a bounce till 925 levels, but that will be a opportunity to just exit, because in the medium term outlook, I can see that it's making a huge head and shoulder pattern, and the targets on the downside would be way below 750, 700 levels. So negative in the medium term outlook, but in the short term, there could be a bounce, and that will be an exit opportunity.
Okay, so there will be a bounce in the short term. Maybe they could watch out for the levels as well, is what Somil has said. So keep an eye on those levels and exit after the short term, because on the technical and the fundamental front, the view is not positive as of now for the medium to long term. Let's move on to the next query then. This is an investment query again. We have Muthu Lakshmi, who's writing to us from Bangalore. She wants to invest 2 lakh rupees in banking sector, and she is asking if she can invest in ICICI Bank. Shahina, your view coming in. I do believe that you did mention ICICI Bank as well just a short while ago, right?
Yeah, so I think it's a good stock to invest in, good bank to hold for the longer term also. Valuations at about 3 times book. I'm not saying it's cheap or anything, but in terms of all other parameters, it's doing pretty well. Loan growth around 11%. Their balance sheet is strong. They're doing pretty well across the board. So I would say, yeah, you can invest in ICICI.
Okay, can invest in ICICI. And Somil, your view, ICICI Bank, should they look to invest, or are there other banks maybe that you could look at, or private banks that you would suggest?
I think I could make a basket for the bank side. ICICI Bank, HDFC Bank, Bank of India, PNB, Canara Bank. These are some of the stocks which I really like. The Small Finance Bank, AU Small Finance Bank also looks great, but those stocks, the mid-cap stocks, should be small in size in your basket. But ICICI Bank, HDFC Bank looks good. Majority of your basket should be ICICI Bank and HDFC. Support is around 1363 for ICICI Bank, and I think should take support around those levels, and that will be a good buying opportunity.
Okay. A basket of maybe the banking side is what you could look to invest in, and Somil has given you some of the names as well. Next query for today is coming from Gopalakrishnan, who's writing to us from Kerala. He's holding 3,000 shares of Gujarat State Petronet at a price of 340 rupees per share. Wants to know if he should remain invested or book out his profits. Shahina?
I would say, look for any bounce to switch from GSPL. It's been a non-performer in terms of financials. If you see last 4 years, almost on the top line, it's been flat. Profitability has been flat, in fact, lower in FY25. The first quarter of this year, FY26, was a bit better, both in terms of average realizations were slightly higher. Transmission volumes also were slightly higher. But and valuations actually is reflecting low valuations. It's reflecting the poor performance over the longer term. So as of now, since valuations are low, I wouldn't say just outright sell, but it's a switch. I would look for some other stock.
Okay, you would look for some other stock right now, and maybe look to switch from the losses that are making, can book some bit of that as well. On the technical front, Somil, what should they do, right? 340 is their buy price and 298 is what the stock is at. Does it merit to hold on for some bit of a time? Maybe, is it going to move a bit higher in the shorter term?
Maybe in the very short term there could be a bounce, but in the medium term outlook, I don't prefer to stay for a very long time, because this stock has been in a downtrend for a very long time now, since September, October 2024, and it is struggling to go about 200 daily moving average. So probably get on to some other stocks, other sectors, maybe banking sector or defense sector is looking good right now. Pharma is also looking good, but I would not prefer to stay on the stock.
Okay, both our experts do not prefer staying with this stock right now. So yes, move to other sectors like they mentioned as well. Next query for today, K. Padma is writing to us from Andhra Pradesh. She's holding 409 shares of Infibeam Avenue at a price of 30 rupees per share. Wants to know if she should hold or sell this one. Shahina, your view?
I would say continue to hold because performance is improving. If you see the first quarter numbers were pretty good in terms of their profits and even revenues. Revenues were up substantially, actually 75% higher on a YOY basis, and they are a small cap. In on the payments platform, they've got some good products in payments as well as they've got e-com on their platform. So I would say you can continue to hold. Valuations are not expensive.
Okay, valuations are not expensive. Continue to hold as of now. Seeing some improvement in terms of numbers is what Shahina is highlighting. Next, Vaini. Actually, I'll come to you, Somil. Infibeam Avenues on the technical front. What are we watching out for? Similarly, could we expect and continue to hold this?
Negative on the stock, actually, trading below averages, struggling to go above the previous swing highs. Not very positive on the stock. I'll be expecting lower levels till 13 or 12 levels. So I would suggest to exit the stock.
Okay, that's a view coming in on the technical front. But that was the last query. So, Somil as well as Shahina, thank you so much for joining in with us. And Shahina, thank you so much for coming in on a Wednesday instead of a Friday. But hope you're back on Friday as well. To see you soon. Thank you so much for that. But with that, we'll wrap up this edition of Your Stocks. Thank you so much for tuning in. But remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C and Global Lens at 8:30 p.m.